Everybody, welcome to my Wiley PowerPoint walkthrough. This is for Chapter 14, a managerial accounting overview. This is from the textbook Accounting Tools for Business Decision Making, 8th edition. Authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. The PowerPoint used in the presentation is copyright 2023 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This PowerPoint presentation is copyright 2023 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky, not the authors of the textbook or of Wiley. Okay, so right over here, again, thank you to Wiley for allowing me to do this. Pretty brave. My publisher that I've used for the last 9 years that my school has chosen, says absolutely not. So the fact that Wiley says yes, that's awesome. Okay, so right over here. So again, the purpose of this is really, I've taken Wiley's slides. I'm not making any changes to them. I'm going through them, and like for the last one, I was like going out and pulling stuff from like sec.gov, but that's financial statement analysis, and so that's a little bit more appropriate. But over here, this is just kind of talking about the managerial accounting basics, and let's get to it. Okay, so, with the biggest, and I've made other videos on this, so if I'm repeating myself, I am, because it's just, I'm getting to use Wiley's materials. So right over here, the primary users of reports for financial accounting are going to be external users, right? Stockholders, creditors, and regulators. And let me just, before we get to this, the thing that messes up students in managerial accounting is that in financial accounting, there's a nice arc in terms of, oh, right, we're going to start with recording transactions. We're going to make financial statements. Then you're going to look at cash and AR, inventory, property, plant, and equipment, current liabilities, non-current liabilities, owner's equity, and we end it all with the statement of cash flows, and it kind of ties it in a nice package. Managerial accounting, by its nature, doesn't have that cohesive nature. There are some parts that are cohesive, but it's a little bit different because it involves a lot more analysis. And the other thing is that there are no rules, but there are definitely going to be some best practices. And if we kind of go through and look at this, it's for financial accounting, we have to follow the rules, like because they're being used by third parties. So we have to follow a very specific set of rules, which is generally going to be GAAP. And, this is really, they're also historical because we're kind of reporting on the past. We may give a little bit of insight into the future, but it's not going to be that like what we do over here, which are basically, it's really internally is like, how do we go through and make better business decisions, right? Do we leave California? I don't know. Might be a good idea. But unless Irvine Valley College moves out of California, I'll be staying at Irvine Valley College. So there you go. Extends beyond any accrual accounting, any relevant data, right? So again, this is really, there's not audits. It's we're really preparing, information so that management can make better business decisions. Now, what I'll also say on this is that if I was working for Jeff Bezos at Amazon and I said, hey, dude, Amazon Web Services, which is now a big portion of their income, is going to lose money. He would say to me, well, Bennett, you're an idiot because I'm not doing it. Well, I know, I see your analysis that it's losing money, but for him, it's more about the longer term vision. So what you have to do as a managerial accountant is you have to be as objective as possible in terms of kind of going through and basically preparing projections that are as accurate as you possibly can. If the company's going to make a loss, that might be okay. They may be doing it to, they might be doing it to get into a particular line of business. And that's really what Amazon has done throughout its history, is they have gone into businesses, they've lost money, and I don't want to say intentionally, but they've lost money. And it's really more just to kind of obtain that market share. So over here, management functions, planning, maximize short-term profit and market share, Commit to environmental protection and social programs. Yeah, absolutely. Add value to the business. A lot of this too is that depending on the state you're in, this is kind of mandated, and also we are going to an area of corporate social responsibility. The Securities and Exchange Commission is looking more and more at ways of having companies comply. It's kind of like the Wild West right now, but that's something we're going to be seeing evolve the next 3 to 5 years. Directing, coordinate diverse activities and human resources, right? That's a huge, that's a fun one. Implement plan objectives, provide incentives to motivate employees, money. And I think we're now kind of seeing too that a big incentive to motivate employees is that you're giving them time off. I've talked to a lot of students, and a lot of them want that work-life balance. Hire and train employees, produce a smooth running operations. So it's directing operations, controlling operations, keep everything on track, determine whether goals are met, decides what changes are needed, and then you're constantly revising it. Okay, so if we look at this over here, this is actually incorrect. The internal auditor needs to be reporting to the audit committee of the board of directors. So this is actually not correct. I mean, it's not a good one. And the reason is like, you really have the board of directors is going to hire 2 people. They're going to hire the CEO and the CFO, and that's pretty much it. So when you see this over here, this is really not a good org structure. You could do this if you were private, but public, my God, I had my head on a plate. Okay, so over here, indicate that the statements are true or false. Do it. Okay, so managerial accountants have a single role within an organization, collecting and reporting cost and management. I don't think that's right. That's false. They have a lot of other stuff they have to do too. Whenever you see something like single role, that's really long, but financial accounting reports are general purpose and extended for external users. The answer is yes. Managerial accounting reports are special purpose and issued as frequently as needed. Sure, that sounds good. Managers' activities and responsibilities can be classified into 3 broad functions: cost accounting, budgeting, and internal control. I don't think so. That doesn't seem right. I think it's different. Okay, managerial accounting must show, oh, no way. It's not GAAP. It's free range. Okay. Describe the classes of manufacturing costs and the differences between product and period. Okay, this is actually really important. A product cost deals with the production of the product, right? So if I'm making what am I going to make today? I'm going to make an electric car. And so the cost of the body of the car, the electric engine, the tires, all of those are what we call product costs. When I go through and do marketing, right, which hopefully doesn't mean my car is on fire for 5 hours in Florida after a hurricane, that would be a period cost, right? So if a period cost is going to be something like sales and marketing, accounting, general and administrative, and then, again, over here, what costs are involved in making a product or a service. And let's take a look over here. So the main ones that go in, and again, I have a lot of different videos that are on this, problems from this chapters that have been solved. Manufacturing costs, activities and processes that convert raw materials into finished goods. This is going to be what we call a product cost. What's a direct material? They're raw materials, right? They're raw materials. Like if we look at it, I'll just pause momentarily. So over here, when I look at Wiley, right? So when I look at the textbook, some of the questions, right? So you've got raw materials. You've got, actually, let's do this one. Got raw materials, payroll, and overhead. These are all product costs, right? And these are costs that it takes to basically go through and to make a product. The raw materials come in, and then the raw materials that are put into production is something we call direct materials. Our total factory payroll is made up of direct labor and indirect labor, right? DL doesn't mean dirty laundry, it is direct labor. IL does not mean on the injured list, it means indirect labor. Indirect labor is going to hop down over here, goes word factory in it, right? That's what we kind of say is factory overhead. So everything you're seeing here, when we see this product cost, remember when you learned financial accounting, when we sold inventory, right? What did we do? Well, we debited AR if we're selling an account, credited sales revenue. We then went and debited cost of goods sold, it's an expense of selling, and we credited inventory. So really the way to think about it, that these are all costs of inventory, right? And so this is really, when we're talking about a product cost, right? This is really going back over here. What's a product and a period cost, right? The product cost is anything that is basically being related to production. And it's going to fall into one of these three categories, right? So the direct materials, they're raw. And then we put these into production. So over here, so that's what raw materials are. Basically, they become direct materials. Okay. By the way, this is Huntington Beach High. Awesome volleyball, baseball too. Okay. Not that I'm biased that my son plays on the team, but there you go. Indirect materials. So indirect materials, basically what happens is this is going to be something that it's kind of like indirect labor. It travels. And I don't have an example of this right here, but an indirect material, it means that we can't directly relate it to production. So to a certain part, so it's going to come down over here to factory overhead. And while we're talking about that, I'm going to show you a better. So if we look over here, right? So this is, let's see here. So this part over here is this 17,000. This is what we would call an indirect material. The direct materials go into the particular jobs that we're looking at. The indirect material basically goes into factory overhead. And I don't know if we actually had something with indirect materials from chapter 14. So the fact that we're going over it now on the slide is interesting, right? Okay, so let's kind of come back over here. So we've got indirect materials. Again, we can't relate it directly to the product, so it's going here. Don't worry about that for now. You'll see it in chapter 15. Okay, so direct labor, indirect labor. Direct labor, I can tie it directly to a product. Indirect labor, if I have a supervisor that's, say, supervising a bunch of different jobs, that's going to be indirect labor because I can't tie it to one particular job. Okay. Manufacturing overhead, if it has the word factory in it, it's going to be part of manufacturing overhead. So again, if it's factory equipment depreciation, factory insurance, factory utilities, all those are going to be examples of manufacturing overhead. Now, everything we've just discussed is a product cost: materials, labor, overhead, product cost. The period costs, right? That's a product cost. A period cost is going to be non-manufacturing, right? It's basically SG&A, selling general administrative. What else? SG&A. So sales commissions, sales salaries, office equipment depreciation. So if it looks like it's, anything to do with selling or administrative costs, that is a period cost. When we look at how that works in terms of a real publicly traded company, if I come over here and look at the Home Depot, which is a retailer, and I look at the income statement of the Home Depot, and I come over here to their income statement, right? Cost of sales, same thing as cost of goods sold. Selling general administrative, right? So these are not cost of goods sold. These are not what they're going through in selling. These are period costs, and they have to go through and be expensed immediately. Okay, whereas the product costs are going to be sitting in my inventory until I go through and sell them. Okay, so over here, product cost versus period. Again, non-manufacturing costs, selling, admin expenses. Over here, so suppose you started your own snowboard factory, terrain park boards. Here is the cost that your snowboard factory would incur. Assign the following costs, right? So wood cores, fiberglass, resin, that's going to be a product cost. Labor to trim and shape the boards, that's direct labor, product cost. Factory equipment depreciation, part of factory overhead. Okay, now property taxes on the factory building, right? We love the word factory. It's going to be a product cost. Advertising costs, period costs, right? To advertise the product we're selling, period cost. Sales commission, period cost. Factory maintenance salaries, product cost. Salary of factory manager, manufacturing overhead. Okay, cost of shipping boards to customers. Now, this can also get people confused, but it's a sales cost because it's basically if I'm shipping it to a customer, that's part of the sale. It's not part of the product cost. The salary of the product quality inspector, right? That's going to be part of factory overhead. Okay. So over here, manufacturing costs. So we're just kind of isolating these through over here. I've got a couple of different questions that I went through and did on this. Do it too. Bicycle company has 3 costs: tires, wages of employees. So let's go over here. So tires, they make bicycle manufacturers, or excuse me, they make bicycles. Direct materials, wages of employees, but the tires, that's direct labor. Factory building, manufacturing overhead or factory overhead. Advertising, period. Salary of accountant. Now, if it said a factory accountant, sure, you could put it as a product cost. If it was designed, if he's basically they're just doing things on the production, but generally that's going to be a period cost. Over here, factory, machine, lubricants, manufacturing overhead, spokes, direct material, salary of the factory manager. Again, you could also might say that, okay, if he's one product only, it could be direct labor, but yeah, it's going to be manufacturing overhead. Handlebars, direct material, salary of factory maintenance employees, and then the product quality inspector, that's all going to be manufacturing overhead. Okay, so how do you do a cost of goods manufacture and prepare financial statements for a manufacturer? Okay, so this is where I really do not like the way that they go through and do this. This cost of goods manufactured just drives me bananas. And when you get these questions, this is what I'm going to suggest you go through and do. You go through and you use the T accounts. When you go through and see how I've taught this, and you're looking at the solutions of the various different questions that I'm giving you, there's no way I'm doing this through a cost of goods manufactured statement. I won't do it, right? It's not a good thing to use because it's not a good visual representation of what's happening. Somebody I really hold in high regard, her name is April Morris. She teaches at Cal State Fullerton. She is way better than I am at teaching cost. And she even said, if you're not teaching it with T accounts, I don't know what to do. I can't explain it otherwise. So if it's from April, she's awesome. So yeah, but that's how you kind of go through like a cost of goods manufactured schedule. If you see this, what is this? This is 386,910. As you can see over here, I'm getting the same result, but at least I'm putting it somewhere over here where you can actually kind of go through and figure it out. So again, I would really, really recommend, instead of doing the schedule, that you go through and use the T accounts, right? But if your instructor is being absolutely insistent on it, I would probably do it with the T accounts and see what they say. Again, I don't really see a lot of these, but it is more service-oriented environments. Okay. So service industries, approximately 80%, yeah, right. Manufacturing is leaving California. I think all manufacturing is out of California. But as we look over here, so for service companies, right, so manufacturer's value chain. So you've got over here production, sales, delivery, customer relations, these different types of things, theory of constraints. I'm not going to really spend a lot of time with these just because I really haven't really been as involved with these kind of things professionally. But if we look at just in time, what you're really trying to do is you're trying to limit your inventory output so that your inventory is immediately ready for sale. You're not making a backlog. Total quality management is you're essentially doing a series of checks and balances to essentially reduce defects, in finished products with a goal of 0 defects, right? We want to have something where once our goods leave a facility, they are what they're supposed to be. Because if they're not, and if something happens with our product, and we could get sued. Okay, theory of constraints. This is bottlenecks within a specific approach to basically identify and manage them so that you get rid of the bottlenecks to, you basically look at, okay, so we're not getting a certain product timely. How do we get around that? Enterprise resource planning. Software programs to design and manage all business processes, ERP systems. It's almost should be a 4-letter word. Activity-based costing, we'll be talking about this in chapter 17. It's basically a way of going through and allocating. It's a way of specifically allocating your overhead to based on the product's use of the overhead activities. And that's going to be in chapter, I think it's chapter 17. Balanced scorecard evaluates operations in an integrated fashion, uses financial and non-financial measures, and links performance in a cause and effect fashion. They tie to the company's objectives. I haven't really taught this, so I'm probably not the best person to go through and ask. I maybe talk about the concept, but again, right over here, business ethics. Yeah, if you're in accounting and you don't have ethics, you need to go to law school. That's a really good idea. And again, in terms of doing with business ethics, part of the reason why we like to hire CPAs is because if we do something evil, we will not only lose our job, we will also have our license removed. Okay, so systems and controls, basically, how do you do incentives? Basically you have to be careful about how if any time you're telling your managers that it's going to be based on a certain amount of inventory output, even if it's not being sold, that's going to be a problem. SOX. Sarbanes-Oxley came out in 2002, and it was really essentially as a result of Enron. And if you just want to kind of see how SOX looks like in action, if I come over here to the filing, you're going to see over here these different exhibits. And I, Edward P. Decker, certify that the following, I reviewed the 10Q and all these things. He's the chair, president, and CEO of the Home Depot. So when you look at him, right, in terms of signing this off, this is an example of someone signing off, right? And this is for publicly traded companies. Doesn't matter the size, they all have to sign off. In terms of whether or not a publicly traded company has to test their internal controls, that's very, very different. Okay, so selection criteria for board of directors and audit committee. Yeah, there's so many different rules, and you have to, generally the best way to kind of go through and look at the rules in terms of governance for companies. If I go to the NASDAQ listing standards, and if I look at this over here, if you see this, there's this thing called an initial listing guide, and I can also put this in the basically in this part over here. Okay, corporate governance certification. I think the last time I forged something, and I don't want to do that again. Well, I did it educational purposes only. But essentially, when you're a NASDAQ listed company, you have to have an audit committee, compensation committee, nominating governance committee, also need to adopt a code of ethics, right? So when you look at all these different parts over here, the corporate governance certification form, and it wants me to, oh, here you go. So these are the certifications that you have to kind of go through and follow. if you're going to be going through and looking at if you want to be publicly traded. So when we see over here that the certifications and then the criteria for the board of directors and audit committee. So you have to have a majority of independent directors, meaning that those are directors that are not the CEO. So this guy, Edward Decker, who signed off on this, he's the president and CEO. He is not an independent director because he has a role within the corporation. He is chair of the board, right? But he has over here is a role in the corporation, so he's not an independent director. The independent directors are the ones who head up the audit committee, the compensation committee, the nominating and governance committee. They're going to be the ones that would basically be hiring and firing the CEOs and CFOs and doing other things as well. Okay, so right over here, so let's go back to our slideshow. So again, corporate social responsibility. This is really, nearly provide. So there's a lot of different sustainability reports, and to kind of look at this and CSR for Tesla. Okay, so this basically over here, if we look at corporate social responsibility and citizenship, and this is another company that's doing it for them. This is their impact report, which is essentially, I think it's the same thing. There's not a set of defined standards yet. It's still kind of out there, but it is kind of getting to a place so where there are going to be more rules and regulations about it. But when we look at corporate social responsibility, this is really kind of taking into the factors beyond the financial statements. Are we being good corporate citizens? And for example, if Tesla offloads certain of its polluting facilities to, or not that they do, but if they offload it to like a third-party contractor, that can actually turn around and buy them because they have to go through and report it. But you can see here there's a 144-page report. I'll put this down below in the comments or in the description section so you can kind of follow along if you want to take a look at that later on. Okay, so again, if you're taking my class, right, this is not going to be covered. And what happened to my slide? Okay, so really quickly, and I don't know if I got this in there or not, but I will be including the Tesla part over here below. This is an example of corporate social responsibility reporting. They talk about the triple bottom line, and this is having to be more and more publicly traded companies are having to go through and to do this. So over here, I match the descriptions below with the corresponding terms. Okay, so let's see over here, all activities associated with providing a product or performing a service. This would be a product cost. Did we get that right? Value chain, Okay, I'm not going to do this one. Okay, and this is taking us to the end. So I want to thank Wiley for allowing me to do this. I also have other ones that I've made, but it's always kind of nice to have another one that's Wiley's allowed me to use this, which is awesome. I want to thank you for allowing me to be in your video today. Hopefully I haven't disrupted your sleep by too much. I look forward to seeing you on the next video, and go Oilers.